Hello, everyone. Welcome to another backstage interview at the May Metals Investor Forum. I am joined now by Scott Close of EMX Royalty. Thanks for making the trip up here.
My pleasure. It's great to be back.
For sure. So EMX has had a very busy last year. I mean, you guys are always busy on your project royalty generation side, but in the last year, you've been incredibly busy on the royalty acquisition side, which is a transformational thing for you, and also because some of the royalties that you established a long time ago are really coming to fruition. So do you want to just run through the highlights of that crazy news flow that you've had?
Yeah, where do I begin with that? So one of our major acquisitions was the royalty portfolio from SSR Mining.
Yes,
right?
for sure.
And within that portfolio are some very key assets. The one that has come to the fore today is called Gedek Tepe, which means Notch Hill in Turkish. Obviously, the property is in Turkey. And it's an interesting geological system in that there is a gold oxide cap lying on top of a polymetallic system. On the gold oxide cap, we have a 10% net smelter royalty, really.
Which I didn't believe when I saw it in the press release, because I've never seen a 10% NSR royalty ever in my life.
Yeah.
I mean, and it doesn't last that long because it's just on the cap.
Yeah.
But in the 2 or 3 years that it lasts, my goodness, does it ever pay?
Yeah, it does. It pays very handsomely. So that'll last about 5 years, but the bulk of that will be exploited within about 3.
Okay.
And so that's going to turn into a very handsome ATM for us, and very soon. So that royalty doesn't actually kick in until it has produced 10,000 ounces.
Okay.
As of about a month ago, they had produced about 4,000 ounces.
Okay.
So we're somewhat north of that number right now. We expect for them to breach that 10,000 ounce threshold by late June or early July. And then that cash flow commences to our treasury, which we're very excited about, and that will be a very handsome ATM for us. And then once that oxide cap has been depleted, they get into the sulfide body of mineralization below that, which is copper, zinc, gold, and silver, and we have a 2% NSR on that, and then that will continue to pay out for many years going into the future.
For sure.
And then there's also 2 other properties in there, Yani Pazar, which is also in Turkey, and De La Blayos, which is in Argentina, which are in the development stage right now.
Right. So that's the SSR portfolio.
Yep.
Then you bought Caserones,
Yep.
royalties on Caserones. You did 2 purchases to get yourself a pretty healthy royalty on a really long-lived copper asset.
Yeah, that's right. So Caserones, which I prefer to call Cacherones, we started out by acquiring a 0.4118% NSR,
Okay.
and we bought that from a third party. And then we had the opportunity to up that to 0.7335%, which we are at now.
Okay.
We get paid on that royalty on a quarterly basis. And prior to our second acquisition of the royalty there, that was paying us close to $1 million on a quarterly basis.
Right.
So now it's going to be
almost doubled. You're in the you increased
that's
that
right.
by 80% or so.
So that's going to dramatically change our cash flow picture.
And then you also have Balia, which is a project that has been moving up through the pipeline for a while, and is also starting to send you money.
That's right. So that's the first project in our portfolio that was an organically generated project that has now come to production, right? So we bought that property from the MTA, which is sort of like the Turkish Geological Society.
Right.
In Turkey, you don't stake properties, you buy them at government auction. We bought that property for the equivalent of about $17,000. And this is a very prolific base metal district. So it's lead, zinc, and silver with a substantial silver content. And that is in commercial production now. They've run into a bit of a Hollywood problem there in that there's so much additional mineralization that has been realized there. They're going to have to build additional milling facilities to be able to accommodate that.
Not the worst
So,
problem.
so that's right. So as the next few years progress, the cash flow just continues to ramp up on that. And in 2025, we'll probably be realizing, I don't know, $5 to $6 million a year or something from that.
So we haven't touched on everything that pays by any means in your portfolio. There's a bunch of others, Leeville and whatnot. And then there's the Teambook asset, which the royalty is in litigation. We'll see how that all plays out. But just based on the ones that we know and that are starting to pay, coming to life for EMX in 2022, this is a big year of change for EMX, right? This is where
Indeed
you
it
go
is.
from not really making money to making quite a bit of money.
That's right. So we could have been cash flow a long time ago, but what we've been doing with the cash flow is acquiring additional properties to feed the pipeline for the organic royalty generation side of our business.
Right.
So it's prospect generation. We go out and acquire the prospective mineral real estate around the world, do some basic inexpensive explorations on that, find signs of mineralization or outright mineralization enough to entice another company to come in, buy that property, and then we hold back a royalty on that.
Which is like what you did with Balia back in the day, and those other companies have then, in that case, taken it all the way through to production.
That's right.
Which is the goal.
Right. So if we hadn't been buying so many properties, we'd be comfortably cash flow now. But we're playing the long game here and continuing to build out that organic generation end of the portfolio.
Now, I don't expect you guys to stop building because you're long-term thinkers and see lots of opportunity. But this transformational year in terms of cash flow does mean that there's options on the table for EMX that weren't there before. And the one that I want to talk about is a dividend. So do you want to talk about the thoughts on that and what impact that might have?
Yeah, so we're looking to implement a dividend later in the year because as the year progresses, we will become decidedly and discernibly cash flow positive. So right now we're sub-cash flow positive or cash flow negative. When we become decidedly and sustainably cash flow positive, that is going to make a material difference in our share price. And we look to implement a modest dividend. If you take a look at the spectrum of royalty companies out there, I think there's only one in the sector that pays a dividend in excess of 2%.
Right.
Most of them, if they do pay a dividend, and many of them do not, only pay between 1% and 2%. So you never buy a royalty company for the cash flow it's going to provide you via a dividend.
Sure.
What the dividend really does for royalty companies is it opens the door to institutional buying. And the way that works is there's a lot of funds, pension funds and other similar vehicles whose mandates dictate that they can only buy equities that provide a dividend. So once we provide a dividend, that opens the door to big institutional buyers being able to buy our shares, which we think will propel the share price quite a bit higher. So that's the real reason for implementing a dividend.
For sure, and that dividend difference in terms of investors who can be interested does explain the sort of segregation of the royalty world, where the smaller players, they're smaller players, so they deserve lower premiums or multiples for being smaller. But once you get into that dividend world, your multiple goes up because of that. Because companies, pension funds that want low risk exposure to copper, a royalty company is a great way to do that, and they need to find one that pays a dividend.
That's right.
For sure.
And sort of running parallel to that, we did that financing with Franco-Nevada, which
is an interesting one.
It was an interesting one, and that helped facilitate the acquisition of that second addition to our Caserones royalty.
Yeah.
And that is the first time in Franco-Nevada's history they have ever owned or bought shares in a junior resource company. We're the first.
And I mean, I think,
And I think that speaks volumes.
I mean, I think we're running out of time, but I do want to discuss that for a moment. What was the team's reaction? Like, what do you think when you're like, okay, Franco put a foot in our door like that? They don't do that. For anyone out there who doesn't know, Franco's the biggest royalty company in the world, the best established. They're the biggest. So what's your reaction when you heard that was happening? What's your first reaction?
Well, I think I think that's a great vote of confidence in validating what we do as a company when someone as shrewd and as successful as Franco-Nevada comes in and buys our shares at a premium to the market.
Yeah, it was a big piece of news.
And they're obviously astute enough to realize that when we become decidedly cash flow positive and implement a dividend, the value of those shares in their treasury is going to increase. So
there you go. Okay.
All
Great
right.
conversation. Great catching up with you. Nice to see you.
Good to see you. Thank you.
Thanks.